did you? Anything you want.
A gold price rebound has just become inevitable. Donald Trump is the reason the gold price is set to increase before the end of 2018. It's coming. You may not be seeing its effects yet, but President Donald Trump, or rather, Special Prosecutor Robert Mueller, could make the gold price rise again. It might be wise to buy some gold now, while it's trading at a discount. As the chart below shows, the gold price is hesitating to return to a floor of $1,200 per ounce. The gold price started 2018 in the right direction, but an accelerated Federal Reserve interest rate lifting program has ruined what could have been a bull year for the yellow metal. The interference from cryptocurrencies, trying to break their way into becoming the safe haven investment for the Facebook generation, did the rest to keep gold down. And then there's the Turkish crisis. The Turkish economy has the elements to recover, but the gold price may react with a delay, just as it did during the Argentine peso crisis of 1998 to 2002. Trump's impeachment rumors. Rumors of impeachment have surrounded President Trump as early as the transition period from President Barack Obama in December 2016. Until recently, Trump has managed to escape the FBI Special Prosecutor's Clause as he indicted and questioned former close advisors and associates in the context of the Russiagate investigation. But how long will the Teflon around Trump last? The president has warned that impeachment proceedings that may result from the indictments of his campaign advisor, Paul Manafort, and lawyer, Michael Cohen, will crash the stock market. Not everyone agrees with Trump's assessment. But are Americans willing to test the hypothesis? Trump detractors suggest the stock market would experience a relief rally. Yet, these optimists fail to explain how Vice President Mike Pence, more conservative and closer to the Tea Party, would do anything differently than Trump. Be careful what you wish for. Surely, Mike Pence would approach the presidency in a more modest fashion. But what the establishment has failed to understand is that Trump enjoys strong support in many economically neglected areas of the United States. Trump's impeachment would make many people very angry. Moreover, Trump, for all his belligerence, likes to negotiate. His removal would cause U.S. foreign policy to take an even more belligerent tone and leave hawks like Mike Pompeo and John Bolton in charge. The risks of internal and external conflict would no doubt intensify. And stocks don't like that kind of risk or the prospect of instability in the United States itself. In this kind of uncertainty, the gold price benefits. Just to be clear, Mike Pence would present a whole new set of uncertainties, just when Americans and the rest of the world were starting to become accustomed to Trump. For starters, the world would discover just what it means to have a leader guided by biblical values. Indeed, it's time to brush up on your Old Testament texts. In a sense, Pence was Trump's insurance policy, with the message being, I might be bad, but my immediate substitute is worse. Moreover, Trump has served as a vehicle, a Trojan horse, of sorts, for all kinds of unhinged characters who would lead the United States down a far more dangerous path than even Trump. The gold price will soon increase as the world wakes up to this reality. Given what appears to be a terminal decline in the appeal of cryptocurrencies such as Bitcoin, gold seems ready to take back its place as the top safe haven investment. The mechanism through which the gold price will rise is the US dollar. To be sure, the dollar is a problem for the US economy and the stock market whether or not Trump is impeached. Since the start of 2018, the US dollar index has risen by over 5%. Even a 1% rise would have been incompatible with Trump's plans for the US economy. In short, the dollar is way too high. The fast appreciating dollar could not be a worse ingredient for economic growth in the context of Trump's plans to recalibrate the trade deficit with the rest of the world. If the US wants to export more than it imports, the dollar should lose rather than gain value. That becomes even more important in the context of higher tariffs and what has started to look like a trade war with China and the European Union. And that's where the gold price comes in. One of the main causes of the lower gold price is the high value of the dollar. Fears of inflation, given the tax cuts and the real or alleged growth they have generated, have encouraged the Federal Reserve to increase interest rates. In turn, that has pushed the value of the dollar up against other major currencies like the euro. Whereas the Fed has already given up on quantitative easing, QE, the European Central Bank, ECB, has hesitated to start increasing rates. It feels like the Eurozone's economy has remained fragile. Still, in 2019, European interest rates will start going up slowly as well. And at that point, the dollar index will start to flatten its curve. Appetite for safe havens. The dollar will drop in relation to other major currencies at a relative level. By the time that happens, Washington could be embroiled in a presidential impeachment process that will have triggered a stock market correction or even a stock market crash. Should Trump survive the storm, he may feel more confident about taking the Fed's interest rate policy by the horns. The U.S. president has repeatedly expressed his lack of enthusiasm, if not outright anger, over the Fed's decision to raise interest rates. It's highly unusual, though not illegal, for occupants of the White House to comment on Fed policy, but an empowered Trump after the storm, of course, could certainly engage the Fed in a battle. He might even do that before any impeachment proceedings or rumors become more material to drum up support from his base. Either one of those two things should drive the gold price higher. The gold price trend simply fails to reflect its potential, given the gloomy forecasts for the U.S. economy and Washington politics in the coming days. What is certain is that now is the time to watch the gold price carefully. Gold prices to hit $7,000? This contrarian sign makes a case for it. Gold prices could be presenting a great opportunity as gold becomes most hated asset. If you have even a slight contrarian in you, then don't ignore gold prices. The yellow precious metal could be presenting an opportunity like it did back in 2001 to 2002. You see, gold has officially become one of the most hated assets these days. Consider that according to the data from the U.S. Commodity Futures Trading Commission (CFTC), large speculators, such as hedge funds, have turned net short on gold for the first time since 2001. That means they are betting that gold prices will decline. How pessimistic are they? Speculators had 215,000 of futures contracts betting against gold prices. Each contract is 100 ounces of gold. So, they were short on about 21.5 million ounces, or $25.8 billion worth, of gold. Looking at just the number of futures contracts, the last time speculators were this pessimistic was in 2015. Remember what happened at the end of 2015? Looking at this, one has to keep one old investing adage in mind: buy when there's blood in the street. The idea behind this old saying is very simple: you buy when no one else wants to buy and everyone is running away. Speculators turning net short on gold and building up such big short positions is like blood in the street in the gold market. What's next? Dear reader, I believe what we see happening is very interesting. First of all, the gold market turning net short is hands down one of the greatest signals for contrarian investors. It is saying that gold prices may have bottomed and the yellow precious metal could really be worth a look. Also, know that the last time we saw net short positions build up in the gold market was in 2001. If you are a gold bug and have been following gold prices for a while, then you'd know how great of an opportunity gold was back then. It could be presenting a similar opportunity again. Lastly, deep-pocketed speculators are turning pessimistic at a time when the gold market is facing a disparity in favor of higher gold prices. We see demand remaining strong, but the supply side is facing a lot of headwinds. What happens if fundamentals suddenly start to matter? Gold prices outlook, the returns could get a lot sweeter. In 2001, gold prices were trading around $275 an ounce. In the next 10 years, we saw the yellow precious metal soar over $1,900. This represented an increase of 590%. If one says gold is presenting a similar opportunity as it did in 2001, and if we assume we see a 590% move, we could be looking at gold prices at above $7,000 an ounce. I know that $7,000 an ounce is a hard figure to digest for many, but gold prices of $1,900 in 2001 were also very hard to digest. If we just assume we see a 200% move in gold prices, we could be looking at gold prices of $2,400. With all that in mind, I can't stress this enough: Don't ignore gold prices. The yellow precious metal could be presenting the opportunity of a lifetime. The returns could get a lot sweeter in the coming years.